Greetings, everyone. I'm excited to welcome Nathan Gwilliam, founder and CEO of PodUp. Nathan, welcome to the show.
Thanks for having me.
Hey, let's dive right in. Tell us a little bit about your background.
Yeah, I'm a serial entrepreneur. I'm an incurable creator. If I'm not creating something, I die. That's just my personality. I grew up in Tempe, Arizona, not too far from you. I went to school at BYU in Utah. Started my first business in a computer lab on the third floor of the business school there at BYU, and I've built and sold 3 businesses since then. Most recently, I sold Adoption.com, which was the world's most used adoption platform. And about 6 years ago, in 2019, when I was selling Adoption.com, I had a mentor named Russell Brunson, and he told me that if I would publish every day for a year, I would be financially free. He made me a promise. And so I trusted him, and I still trust him. And I decided to take him up on his promise. So I started a show, and I did audio, video, social, blog, all of that. And I published every day for a year. And I got about 3 months into that. And I realized that I needed more than 30 different technologies, that those technologies cost almost $2,000 a month. And that was even pre-AI. Today, it would be, at least 40 that I would need. And they didn't integrate hardly at all together. And they just took way too much time and effort. Even after recording and editing my episodes, I still had to pay someone 4 hours every day just to publish and syndicate all my content out there. One day in frustration, I just said, okay, somebody has got to create the all-in-one solution to bring all this technology together. Kind of like Shopify, right? Shopify wasn't the first e-commerce platform. They still aren't the best e-commerce platform by far, but they were the first one to bring all of the tools together into one platform. And so that's what we did back in 2020. I hired a bunch of very talented developers, and we started building this. We've put about $6 million into it in about 6 years of time now. And we've built a platform that has 60 integrated tools to help you create, grow, and monetize a platform. And we found in this process, when we started marketing it, that a lot of businesses come to us and they say, okay, I need a podcast, but I don't have time. Time was the scarce commodity that was limiting most businesses from podcasting. Not a desire, not a knowledge that something they need to do. It's just time. And so they were all asking us, well, can I just record the episodes and you take care of everything else for us? And so we launched a services business, so software-enabled services called Pod Allies, kind of done for you podcast production, marketing, monetization, 40 different services for podcasters. And that actually is the dominant part of our business, is just these done for you services for businesses using our software.
Okay, so started as done for you, and now tell us.
It started as do it yourself, and it's become a lot more done for you. But we do both. You can use the software, you can use the services with it.
Okay, so today PodUp done for so both pieces. So you can just buy the subscription, do it yourself, or if you want, you have services behind the scenes that then helps podcasters.
That's right.
Okay.
Yeah. If you're the kind of guy that likes to change out your dishwasher when it's broken, you might want the PodUp software. If you're the kind of guy that would rather hire someone to do your lawn and so you can enjoy your Saturday, you might want to look at Pod Allies.
Yeah, it makes sense. And then, tell us a little bit about your ideal customer profile. Is this just, say, me doing a podcast, one person, or like you said, maybe a company who's looking to start their own podcast? Where do you fit in that whole ecosystem?
Yeah, so it could be anywhere. So we see it as a spectrum. And on this side of the spectrum, you have people that don't have a lot of time, but they have money, right? And so it could be a CEO of a business or a lawyer or a doctor, somebody like that. They want influence, they want to be an authority, they want to grow their business, they want to make more money, but the time is their limiting factors, okay? And then on this side of the spectrum, you have people that they have time, but they don't have a lot of money. And so these people would license the software and do it themselves. And these people would hire us to use the software to do it for them. They'd record and then we'd do everything else. And people fall somewhere in that spectrum, right, of the time money continuum. Most of our clients have the title of CEO or entrepreneur is what they call themselves.
Okay. And a lot of CEOs, founders listening to this podcast. So is this something not just recording, but you said a lot of integrated tools. So what else does it help the CEOs with?
So we have a recording studio, but that is one of 60 plus tools that are integrated together in the suite. There's 17 AI powered tools that make the process super easy. In fact, there's one tool that is just about to release. It will be live this month, and we call it the repurposer. And it starts with your long form video, and then it takes that long form video and it cuts it up into like 15 or 20 different types of content. So it'll give you long form video, it'll give you short form clips, pick those to choose from. It'll give you your blog posts, your summaries, your social posts, your hashtags. It gives you just so many different pieces of content that you need, all from one AI function. And that's just an example of one thing that we do for you. Just think of how many hours that saves you.
Yeah, that makes sense, because instead of me using Descript and Cast Magic and all these things, I can just come to PodUp and just have everything in one area.
That's right.
Okay.
And that's just one more tool, right?
Yeah.
We have an engager tool that once you've posted on all those channels and people start responding, how do you keep up with those responses and even know that they're there? So we have an inbox that will bring those different comments to one inbox and let you respond to them and push it out to LinkedIn or push it out to Facebook, or just tools to make it easier. So tools to manage guests, guest management, all of the content creation, editing, all of the publishing and syndication, growth tools, so embedded tools or SEO tools, and then monetization tools. So if you want to add digital or physical products that you sell, if you want to do courses, if you want to do a coaching program, if you want to do a crowdfunding program, we're just about to launch a membership subscription tool that you can run that. Just all the different ways you can make money from your podcast.
Yeah, so that's really interesting, because I was a CFO. Now I'd say kind of creator CFO, and then use Kajabi, for courses and kind of all in one, the creator economy. So do you think you're pushing that way? Because you mentioned memberships, maybe courses, where now we have platforms that are trying to solve all of that for a creator instead of just one thing like podcasts.
Yeah, we are going the direction of being the monetization engine of podcasting. And Kajabi has become the monetization engine of creators, and they just add a little teeny podcasting piece, right? So they're in the space they started one direction, monetizing expertise, and then they add a little bit of podcasting. We came in industry leading podcasting, and now we're adding all the monetization tools. So we're coming to the same point, but from different directions, if that makes sense. And we're obviously much deeper on the podcasting piece than they are in all the other content publishing pieces.
Yeah, no, it's really interesting following that space. So now you mentioned you founded PodUp about 6 years ago, so maybe 2019?
Yeah, 2020, yeah.
2020, okay, so founded 2020. And then let's talk a little fundraising. So it looks like you recently raised some capital. So how much capital have you raised to date?
Yeah, we've raised about $5.8 million so far.
Okay. So 5.8 million. And tell us a little bit about that, because it's just seeing when, you're a serial entrepreneur thinking about starting, all right, we're going to bootstrap, or maybe we'll fundraise, don't know. But what led you to the capital raise? Was there a trigger or milestone or something happened that said, yeah, we should raise some capital?
Yeah, so I self-funded it for the first 18 months. And I got to a point where it was bigger than what I could fund myself. And so I needed some additional funds. We wanted it to grow bigger than what I was capable of doing by myself. And so that's what drove it. A lot of our investors are there from Arizona, because that's where I'm from originally. Gratefully, because I'm a serial entrepreneur and I've built and sold other businesses, hit other home runs, I had that credibility. So it was easier for us than it might have been for others. Your first fundraise is harder. Once you've had a couple of successful exits, it becomes easier to do subsequent fundraises. And we didn't raise any VC money. All of our money was angel money. So it was essentially all from successful entrepreneurs who have made money in other ways, and then they're reinvesting in us. if you know Jason Barney, the Barney family from a big real estate family from there in Arizona, he was one of our investors. Devin Breinholt, who runs a construction company there in Arizona, put money in. Yeah, just a lot of great people that have, Craig Willett, who did UTAS there in Arizona, did a lot of commercial condo development in Arizona. So just a lot of people that made money that likes the idea and wanted to gamble on this one.
Yeah. So it's interesting because, of course, talked to a lot of founders raising VC money or even, growth equity. And tell us the expectations of these investors, say angel investors versus traditional VC. Like what are their expectations as they give you this money, and how may that be different than the VC world?
Yeah. So we're at about $1 million of ARR run rate right now. Most of the VCs that we've talked to have told us, come talk to us as soon as you get to $2 million of ARR. And that's so dumb. It's like a bank loaning money and saying, okay, well, we'll be happy to loan you the money as soon as you have, $1 million in the bank, we'll loan you $1 million. It's like, okay, well, if I had $1 million in the bank, I wouldn't, once I have $2 million, like we hit cash flow positive in May. Like we could be operating profitable right now. We have some investment funds that we're using, so it's making us a little bit unprofitable, but we're at a spot now we can run profitably. And the VCs just have these requirements that, $2 million of ARR, they only want the home run that's already proven it, that's already successful. And I don't think we'll ever take VC money. They just, the requirements, they make you be so far down the path before they're willing to take that risk that by the time I'm at that spot, I'm just not going to need the money anymore.
Mm-hmm. Yeah. So VCs, right, have a certain financial profile or characteristics that they're looking at. But say these investors is that, hey, Nathan, here's some money, tell us how things are going in the year, or, how often are you communicating with these angel investors as far as your traction and performance?
Yeah. Last night at 1:00 in the morning, I sent an email out to all of my shareholders, every single one. And I call it my pod update. And I try to send it out every month. I don't make it every month, but I give them the financial indicators and, some key indicators and milestones that happen in the month. We try to communicate really well. I have a board of directors there's nine of us that sit on the board. And well, there's 8 and a 9th that's about to join, I believe. And all 9 of those, editor going back, all 9 of those are some of the largest investors in the company. So I'm accountable to them on the board. I chose to bring them in, even though I have more than 50% of the ownership still. I want that feedback. And so I'm getting that feedback in regular board meetings with an active board of our largest investors. So they're very involved in that piece of the management of the company and oversight of the company. And then I try to do monthly updates out to them. And then when we do the board meetings, we have a public portion and a private portion. And the vast majority of the meeting is public. And I will record that public portion and I'll send out that video out to all the shareholders as well. So, and then as major milestones happen in between, we'll send out updates to the board. So I think we're pretty active and aggressive in being ahead of communicating with our investors.
Yeah, definitely. That sounds pretty proactive. And as far as, for founders listening who may be bootstrapped right now and thinking, all right, the traditional VC route, any guidance as far as finding angel investors or the best way if I'm going to skip VC? It sounds like you did a lot of local stuff or local connections. So any advice there for finding the right angel investors?
Yeah. So the first thing that helped me is I self-funded it for the first 18 months. If you just have an idea and you want to go raise money with just an idea, it's probably going to be pretty rough. And if you do find money, you're probably going to give away, an awful lot of your company for not very much money. So the first suggestion is you got to figure out how to bootstrap it and get as far as you can down the path as inexpensively as possible before you go raise the money. It'll put you in a completely different position. So people don't realize how inexpensive it is to do some of these things in India or the Philippines. And so, for example, you have an idea for an app, you have an idea for a website, go to India, go Go drop $5,000, go sell your car if you have to, do what you have to do and go get an MVP version of your product created and launched. Go test it. Even if you have to go call people and email people, give it away for free to get your first users, like you can get pretty far down the path of a lot of different business models before you have to raise equity. And if you can go to them and say, I have a product, it's live, you can see it, you can use it, and we have, 172 people signed up for it, and we're needing money to continue the development and to scale this, right? That's completely different than I have an idea.
Mhm. Yeah. Yeah. Completely different than the concept on a PowerPoint. So, and yeah, so that's really interesting. And I'm guessing also your experience, like you said, it seems like multiple time founders who've had successful business in the past, it makes it a little bit easier to raise that next round, or maybe even raise just from a concept.
That's right. So if you're an entrepreneur and you have an opportunity to sell your first business, that's not a bad thing. Like, because you get your first exit, the next one's probably going to be a lot easier than the first one is. You're going to start you're going to have a different starting point on the track than the people that are starting their first venture.
Yeah. It makes a lot of sense. Now let's talk a little go-to-market motion here with PodUp, because I think I was on your pricing page. I don't know if I saw any pricing there. So tell us a little bit how you're finding your customers. Is this, inbound? Is it paid traffic? Is there any outbound motion to find your customers?
Yeah. So what we've been doing to this point is we've been focusing on the software-enabled services because it's been doing so well for us. We get such a ridiculous return on ad spend with that. So we call it Pod Allies is our services. And we hired a YouTube comedian, a famous YouTube comedian, and we had her do a series of video ads for us that were really funny. She was Joan of Arc. We believe a lot in humor advertising.
Mhm.
And so we ran those humor ads and we sent them into our funnel. And then we take sales calls with the people that come in from that. And that's where almost all of our revenue has come from to this point. This month, we are launching almost 70 new funnels. So we're finally to the point, we were at a spot where, like, if you're the one that's using your software, it can have bugs. It can have issues that aren't perfect, right? Because you're the one using it. If you need to use another technology to help you with a piece of it that's having a hard time, right, you can do that. Or if you need to use a spreadsheet to manage something that's not quite right until you fix the website, you can do that. And so while our software was still improving, right? I mean, to build a software with 60 different tools, we needed to kind of buy some more time as we had users in the system, we knew what we needed to do to improve it. We just needed time to get a lot of those things done. And so we essentially did no advertising for the done for you service or the do-it-yourself services, because that's actually harder. The do-it-yourself market is harder because the software has to completely work by itself without them talking to you, without, any bugs. And if it has issues and it needs help, you still can use it with your services team. And so that's what we went to first, and we started marketing the services, and we were very blessed, and we were able to sign some really good customers, and that got us to essentially profitability, just that piece. And now that we're in that stable spot, and we've gotten the software to a much better place, we're now building the funnels, we're re-recording a whole new set of ads, and we're gonna go after a whole bunch of different markets and test the do-it-yourself software. In my career, most of the home runs I've hit, many of the home runs that I've hit have been situations where we've tested a whole bunch of different things, and then we find the few that work really good, and you turn off the ones that don't work as well, and you triple down on the ones that work really well. Like, it's a strategy that's worked really well for me. For example, I helped David Neeleman. He's the guy he started 5 airlines like JetBlue.
Yep.
I helped him start Azul. I've helped him do 2 ventures, and when I helped him do Azul, which was the Brazilian airline, I helped him develop and roll out his digital strategy. And we didn't just launch a Facebook page for him. We launched 100 Facebook pages for him. Like, no joke, really, 100 Facebook pages. And we marketed 100 Facebook pages. And then we found the 3 of them that gave us the best return. And we turned off 97 Facebook pages, and then we tripled down on those 3. And we got to where half of all Brazilians were following us. on Facebook. Half of all the Brazilians on Facebook were following us. And we became the fastest growing airline in aviation history. We did some other things. We built a Brazilian travel social network and did some other kind of abnormal strategies. But the same thing we're going to do here. So we're going to launch 70 funnels. We'll find the 3 or 4 or 5 that do the best, and then we'll kind of ride those to success.
Yeah, really interesting. I've interviewed a couple hundred founders, and the first time I think I've heard about hiring a YouTube comedian to drive that initial traffic. So I love
It
that.
works really well.
I love that. Yeah, it reminds me of Dollar Shave Club, right? Those videos that
Same
got them
style.
started. Yeah. And so right now, is more revenue driven by Pod Allies than the PodUp
Yes.
do it yourself right now?
Because we've done essentially no advertising to PodUp yet. But by the end of October, by November, we should have ads going for the do-it-yourself. They can sign up right now. They can use the software themselves. We're just not marketing it at present.
And then, so I assume on the PodUp side, the do-it-yourself, traditional subscription-based pricing for that.
Yeah.
Okay. And then on
between $20 and $100 a month, kind of not very expensive.
What about Pod Allies, the services side? Is this a retained service? Is this, just depends on the service work that month? How do you charge on that side?
Yeah, it depends on the client and what they need. So we have clients paying us as little as $2,000 a month, and we have clients paying us as much as $50,000 a month. It just depends on what they want us to do. We are experts at building, growing, and monetizing platforms. And sometimes people come in and say, I want to do a podcast, but that's just a piece of what I want to do. I also want a social community for my niche, and I want a membership site that I'm going to charge a subscription for my niche. And I want a courses platform, and I want to, right? And so when they come in with those kinds of things, it's much larger of a project.
And then you kind of, right, 2 businesses going on here. You've got kind of the tech business, the do-it-yourself, plus the services business. So how are you managing this right now? Is there a number or metric or just something, a North Star metric that's important to you to manage these 2 businesses?
So the most important metrics we look at is revenue, right? I mean, you live and die by revenue. And then we look at burn, right? What's the monthly burn and how profitable or unprofitable we are each month. We look at churn rate. There's a couple different ways to calculate that. The one that seems to be the most meaningful to us is called revenue churn. So how much revenue did you have from people that were paying you that has now stopped paying you, right? That is an incredibly important statistic for us. That's definitely one of the top 3 for a business like us. And when we started calculating that number over a year ago, we were above 15-16% average. And you will die as a SaaS company if you're at that rate. But we were a brand new company. We were MVPing, going out to market. We had lots of bugs. The last 4 months, I've had three of the 4 that have been 1.8%, 2.8%, and 3.1%. So, the 3 of the months averaging below 3%. And at 3%, you can be very successful as a SaaS company.
Okay. So, yeah. Some monthly churn numbers that you're referencing.
Mm-hmm.
Yeah. Yeah.
That's right.
All right. Yeah. So revenue, burn rate, revenue/retention rates.
There's others we look at. We look at customer acquisition cost is a really big deal for us. Lifetime value is a really important metric to us. Our lifetime value right now is over $40,000 per paying customer that signs up. So it's beautiful because if you can spend whatever, $500 or $600 acquiring somebody, and then you can make over the lifetime 40 grand off of that person, like you really don't have an ad budget. You really have created a money machine where you can spend an unlimited amount of money on advertising, right? Because for every $600 or $1,000, whatever you put in, you get 40,000 back. Like that is probably the biggest secret of digital business right there is getting your lifetime value of the customer to be like 6 times or more higher than your acquisition cost, right? If you can do that, it's like creating a money machine. Think of like an ATM where if you put a $1 in, you could get $6 out. How much money would you put into that ATM?
Right. Yeah.
And put everything in, and then everything that came out, you'd put it back in again, right?
Yeah. Yeah. And a lot of lovers and haters of LTV to CAC, but definitely very applicable for some types of businesses.
Yeah. So with businesses like ours, if you can reach that, you have no ad budget. People say, what's the ad budget? It's like There is no ad budget. We'll spend every cent we can get if we can get 6 times our money back on it, you know?
I love LTV to CAC, and then also in conjunction with the CAC payback period, that kind of how
Yes.
the go to market efficiency is working. So yeah, love that. Of course, I talk a lot of metrics with founders and CFOs. So all good stuff to track for recurring revenue businesses. So Nathan, let's talk a few stats and figures before we wrap up. What's your current team size?
We have about 40 team members. A year and a half ago, I had 18 in the United States and I had 7 in India.
Mhm.
And we've just been so pleased with our India team. The work ethic, the quality of work. So I now have 4 in the United States and I have about 40 in
Okay.
38 or something like that in India. And I don't know that I'm going to add many more. I'm at a couple more in the United States in the short run, but probably most of my growth is going to be there in India. I can get 5 for the cost of 1 here.
Yeah. Makes sense. You see that model quite a bit in tech companies. So, and then revenue wise, you said running around a million ARR, million revenue range. Most of that coming, it sounds like, from the done for you services, and then maybe
We were
hopefully
84,000 last month.
Okay. Yep. So hitting that magical number. And then so with these new funnels coming out, like, where is the focus? Do you want these both to grow equally, or is there going to be, do equal focus on each side, or do you want to see one take off versus the other?
Okay, that's a really important question and it has to do with use cases. You've got to answer that question, you've got to identify what is your use case.
Mhm.
So if your use case is how do I survive as a young SaaS company, right? Then services is great because it's short term. You can make a lot of money. It's a quick, fast way to get you the capital you need, so you don't have to go raise a ton of money. You can kind of become master of your own destiny. So in the short run, I highly recommend services. It also is a great way where, like Microsoft says, you eat your own dog food, right? As your team has to use your own software, it's a great way to get your software working amazing, right? You're in it and you're using it. And you're not dependent upon other people to give you that feedback or those improvements. Now, if you look at the other side, the other part, continuum of time of your business, and you look at the end of your business, and when you go to sell, your services business is probably only going to sell for maybe, if you're lucky, 3 to 5 times. If it's recurring subscription, and there's a lot of factors in there, you might get 5, but only 5 times your EBITDA, your earnings before interest, taxes, depreciation, and amortization. However, if you look at companies in our space that have been selling, that are these subscription SaaS companies in a high growth industry, we will probably sell our software business for 10 times revenue. And that's different. It's not where the one is 3 times EBITDA, this 3 times earnings. This one is 10 times revenue. So if you run your numbers, if I can just sign up 30,000 customers, I mean, there's 5 million podcasts out there. If I can just get 30,000 of those, right now, my average customer is paying me $1,700 a month. Okay. So that's going to go down as the done for you services, the do-it-yourself services become more. But let's say my average becomes $300 a month, right? And I can sign up 30,000 customers. That's $1 billion sale.
Mhm.
Okay. And so if you want to be $1 billion company, you will never get there with services. The services are important to make you master of your own destiny, to give you the capital to grow your SaaS business, right? It's a necessary evil. I think it's an important part of the process. But at the end of the day, what's going to make you $1 billion company is the SaaS portion, the do-it-yourself people.
Yeah, totally agree, because that's a common discussion I have with founders as they look at their revenue streams and characteristics of just trying to get as much recurring revenue as possible and increase that valuation. So it makes a ton of sense. So Nathan, really appreciate your time today as we wrap up. What's coming up next for PodUp and Pod Allies? What's on your mind for 2026?
Yeah, so we are working really hard right now to get our first 1,000 paying customers. That's one of our big focuses. We're working really hard to get our software working amazing. The 60 tools. We're working really hard to become the monetization engine of podcasting so that we have a dozen amazing tools that work really well. So podcasters that really want to grow and monetize their business, we have the best suite on the planet. I think we're maybe 2 months away from being able to say we're the best podcasting platform on the planet. We are super close. And so that's driving us right now. And then obviously we want to double our revenue here by May is one of our other focuses.
Yeah. Revenue growth, always good. Well, Nathan, really appreciate your time today and look forward to following your journey. If listeners would like to learn more about PodUp, where should we send them online?
Yeah, you can go to podup.com. You can get a free 30-day trial of the software and a free 30-day podcast launch course. We take you through, there's 22 lessons with action items. If you follow those action items every day, by the end of the month, you will be a published podcaster. It's not that hard. And if that seems too much, if you know you need a podcast, but you don't have time, I recommend you check out podallies.com. And that's where we have our done-for-you podcast production, marketing, and monetization services. And we specialize in helping businesses, CEOs, entrepreneurs to become industry thought leaders, to grow their reach and following, to establish credibility, and to grow their business with a podcast as part of their marketing strategy.
All right. Well, if you'd like to learn more, check out podup.com or podallies.com to grow your podcast. And again, Nathan, appreciate your sharing your time and your journey today.
Thank you so much, Ben.